Welcome back to the Generational Investors Podcast, where we explore the timeless principles of building lasting wealth. I'm your host, Joan Woodard III, and we are here back this week with a new guest. This is Joan Woodard, my mother, as well as the CFO here at the firm, Woodard & Company. She is also a CPA, but instead of me doing the whole diving in, I'll let her introduce herself and give a little brief background, and then we'll get into the topic of this week's episode.
Thank you, John. Thank you for having me. I'm a CPA. I started in public accounting a long time ago. I'm not going to tell you when, but many years doing taxes, and this time of year wouldn't even look up from the desk. It's pretty intense. After several years of doing that, then I became corporate controller of a national manufacturing company here in Winston-Salem for several years. And then 2 years after your dad and I got married, I joined Woodard & Company. Again, CPA and registered investment advisor. I do the accounting. I work with our retirement plan accounts. And then also I help our clients. I don't do taxes for our clients, but I help them with any tax question, tax problem they have. Spend a lot of time helping with cost basis issues, things like that. And just anything, any way we can help them make it easier to file their taxes and have all the information they need from their investment accounts.
Great. Well, we're happy to have you here.
Thank you.
Good introduction. So if it's not slightly obvious what today's topic is going to be, given the time of year, we're going to be going into taxes. Filing season's coming up, due April 15th. Well, actually, before I even talk about all that, I'll let you do it all. But so, yes, please tell us what the deadlines are and if there's been any changes to these tax filings for this year.
Sure.
I guess this past year, 2025.
As John said, obviously it's Wednesday, April 15th is the deadline. And that's if you can't file your taxes by then, you can file an extension, and that gives you time until October 15th. You don't have to give a reason for why you can't do it. It's an automatic extension. But there have been a lot of changes this year. The Big Beautiful Bill had some pretty substantial tax benefits in it, especially for middle-class taxpayers, working families. To start with, I guess one of the things that we've all heard a lot about is no tax on tips. And that's up to $25,000, which is a big deal, really big deal. And I'm sure that caught a lot of people unaware and had to change their systems. And a lot of people that weren't necessarily reporting their tips separately, they had to make that change if they want to get this benefit. And I like a sole proprietor who maybe has a service industry where they get tips and they don't keep it separate. Well, if they don't report it separately on their accounting records, then they can't get this benefit. So it's a big deal. I mean, $25,000 no tax, that's a big deal. One of the other things that no tax on overtime, and that I don't think I've heard it explained very much. It is no tax on overtime, but it's not all not taxable. Basically, if you worked 45 hours in a week, then you've got 5 hours of overtime if you're an hourly employee. Well, that 5 hours, you normally get paid time and a half. That half is what's not taxable. You still have to pay your regular pay rate on this extra 5 hours. So again, the payroll software people must have just been pulling their hair out the last quarter of the year trying to get confusing. All these changes and to go back and capture what happened the first part of the year before the bill was passed. I mean, it was kind of a mess, but great benefits, super benefits. Another big change was the state tax. Any North Carolina tax that you paid before, if you itemized deductions, you could only deduct $10,000. Well, that has been increased to $40,000.
That's a big jump.
So that's a huge jump, a huge tax savings. That was a big battle in Congress and to get that passed because some states don't have state tax. Some states have really high state tax. But anyway, it did pass. So that's, the withholding that comes out of your paycheck. It's on your W-2, how much state income tax you paid. Any property tax, county, city, that's considered state tax. If you had to pay extra on your return in 2020 2024's return in 2025, you can deduct that. And if you make estimates, if you're someone who doesn't have your tax withheld and you have to make quarterly estimates, well, any estimates that you paid North Carolina in 2025, again, you can deduct that. So that, it can add up to 40,000 pretty quick if you have all of that on there. So that was important. Another one, seniors. If you're over 65, you got an automatic $6,000 deduction. Just now nice. It is income adjusted, but for a lot of seniors, that's going to be a really big deal. And then something that you're too young to know. Used to, when you bought a car, you could deduct your car interest. You got a loan and you're paying interest on it. Well, it went away several years ago. Well, it's back again. So if you buy a new car and you're paying interest on your loan, you can deduct that if you itemize.
Interesting. So that's a lot of different things.
And that's just barely touching it. But those are the biggies for most people.
You hear a lot about the K-shaped economy these days with just the middle class getting squeezed out, but it looks like a lot of these things are helping, little crumbs to help them along the way.
Well, and they've been saying all along, when people file their taxes this year, that's when they're really going to know and really see that they are, getting more money back.
Makes sense. So what would you say people coming into filing their taxes, what would be some common mistakes?
Some silly ones that you wouldn't think would make. One of the things that IRS says is most common is people don't sign their returns. So be sure you sign your return. And then another one is your Social Security number. Make sure it's an accurate number. That happens a lot too. And then some of the ones that will get you in trouble is make sure that you're not missing any 1099s, because 1099s, W-2s, things like that, that's the easiest for the IRS system to match up with the tax return that you file. And so if it's not there, you're going to get a notice from them real quick. It's not going to take them, a year or two to get through that. It's going to come out and you're going to owe money and you'll have a penalty for not paying, you make sure you're not missing any information. And then one of the things that we help with a lot is missing cost basis. When you sell stock or mutual fund, any kind of investment, you get your proceeds, which is what you're paid for it. And then your cost basis is what you paid for it. And the difference in those two is what your gain or loss is what you pay tax on. Well, and when you get a 1099 now, it shows your cost basis if the institution that's holding your investments have that information. Like when we have a client come in and they want to transfer in an investment, we try to always get their cost basis information and put it in our system. But Fidelity may not have it. So when they do the 1099, it may not show up on there, and it's going to show zero. And one of the problems is nowadays people, when they do if they do their own taxes, you can just import your 1099 information, like our clients can import it from Fidelity. And they're just entering the totals. Well, if you don't go back and look at that detail, you're not going to see that one of your investments has a zero cost basis. And then you're going to pay on that whole gain rather than what the correct number is. So that is a really big issue, and we try to help our clients every way we can with that. But I've had a client that inherited stock in the 60s. And then it was in a dividend reinvestment plan. So every time you got a dividend, you got more stock. So I had to go back and recreate. She didn't have any records about it. Recreate. It took a while to do that. But so that's why you keep your records, but be sure to look at the detail. And if you're getting someone else to do your taxes, your accountant is going to do that. But we have so many people now that use TurboTax or another program and maybe are not looking at all that detail when they do it.
Interesting. And so coming to the table when you're going to file taxes, what are some important documents that you should have doing that? I know it could be a whole rabbit hole going into that just because it depends on how complicated your taxes are. But briefly, what would you say just to make things easier?
Okay, well, I'm going to embarrass you, but when you were younger, I gave you an accordion file, and I said, this is your tax file. And all year, because you'd have summer jobs or whatever, you get information. You put it in this file, so you have it. And at the end of the year, you just hand it to me. Basically, is what you did. But then you just hand it to your accountant. But, W-2s, 1099s, mortgage statements, property tax bills, charitable contributions. I mean, you've got to have backup for everything that you put on your return. And if you're organized like that and have it all there, it makes it so much easier. When I was doing taxes a long time ago, one of my clients was an elderly gentleman. He was great. I loved him. He owned a lot of Franklin Street and Chapel Hill, and so it was all rental property. And he came in every year with this big banker's box, and it had every receipt for every penny he had spent. And he didn't put it in a ledger or anything. He just kept, the receipt. So I spent a lot of time taking those little pieces of paper and making sense of it. But he didn't miss a deduction, I can assure you, because he had everything. So it's better to have too much than too little when it comes to your tax information.
Interesting. That's couldn't have been too fun on your end.
It was.
Anyway, so going from there, talking about IRAs, is it too late to contribute to one for last year, 2025? And if so, or if not, what are the contribution limits?
Okay. You can still contribute to an IRA up till April 15th. And even if you file an extension to October, your contribution cutoff is April 15th. The limit, $7,000 per individual, or $8,000 if you're over 55. So, or over 50. So you can still do it. And then also, even if you're in a retirement plan at work, depending on what your income is, you could still do an IRA in addition. So that's something to look at, a Roth IRA or regular IRA. And Roth could be a whole nother section to talk about here. That's a lot to talk about. Also, there are other options like a SEP IRA. A lot of self-employed people or smaller business people will do that as their retirement plan. You have to establish it before December 31st, but you have till April 15th to make your contribution. And a lot of that is because small businesses oftentimes don't know what their income is until their taxes are prepared. And then that gives you time to make that contribution. And you can do up to 25% net of your self-employment taxes, which the limit on that one's like $70,000. So that's a vehicle to really put some money away. And then just one little quick tip, if you're in a health savings account, an HSA, you can also, if you haven't met your limit, like a lot of people have it taken out of their paycheck. If you haven't met your limit, like individuals $4,300, family is $8,550. You can make an additional contribution there, and again deduct that off your taxes. And that's money that you contribute tax-free, grows tax-free, and if you spend it for medical expenses, you don't pay taxes on it. So that's a great benefit. And then one other last thing on HSAs, if you're over 65, you can withdraw money for non-medical reasons, and there's no penalty. You do pay tax on it because it hasn't been taxed, but you don't pay a penalty. So that's another kind of sneaky way to save.
Yes. Very much so. There's a lot of different ways out there. So let's say you pay too much money to the IRS, you get a refund. What would you say? I know it depends on the individual, of course, but from a financial planning standpoint, what would you say could be one of the smarter ways to go about getting a refund?
First, I'd look if you have high interest rate debt. Pay off that debt. If you have time, you've got your taxes done, you don't have to file yet, and you haven't made a contribution to an IRA or retirement plan, and you're getting that money back, then make a contribution to a retirement plan. If you have to pay estimates because you don't have income tax withheld, you're, again, independent contractor or sole proprietor, then just get this refund applied to your first estimate. Okay. So that reduces the amount you have to come in. That way you can go ahead and get it in the system. And next time, look at your withholding and make sure you don't have too much being withheld so you get that money to use instead of letting the government have it all year.
Yes, you lose purchasing power.
Right. I mean, a lot of people use it as almost like a savings account, but it'd be better if you took that $100 a month or whatever and put it in your own savings account rather than the government have it all year.
So, well, we thank you for coming in. Any tips, anything for people that maybe have not filed yet, just any final considerations that you would give to the audience?
Sure. Well, if you haven't filed, you still have a few days. So if you can, try to get it in. But if not, make sure you file that extension. Again, it's not an extension to pay. You still have to come up with some estimate of what you think you'll owe and pay with that extension. It's just an extension to file. And if you don't pay, you get, well, there's two things. If you don't file, the penalties are horrible. It's like 5% up to 25%. If you don't pay, it's 0.5% a month until you do pay. So you really don't want to get in that situation where you're not taking care of your business and doing what you're supposed to do.
Yeah, it could be bad.
Yes, yes.
There you have it. And so just to round things up, well, we thank you for coming in and everything.
Thank you.
And so we're going to come into the last segment, as always, John's Pick of the Week. And this week is something we can both relate to. This week we're going to talk about fasting, the benefits, kind of what it is, what it does. There's different types of fasting. What I consider fasting is just when you refrain from eating food, but you can still drink water. And also I like to include stuff like sodium, like electrolytes, just to help your body stay hydrated, because that's what electrolytes does. And that might be for another day. But anyways, there's a bunch of different people that I like to listen to. One of them is a Dr. David Sinclair from Harvard University. He has worked with Tony Robbins with some of his books and everything to help get things. But one of his big things that he prizes is intermittent fasting. So that's basically just doing it between a 16 to 18 hour fast and then eating that other window. And sometimes it could be just eating one meal a day. And that's something that he really prizes. But the idea of it is just, it helps, from his standpoint, he's found through his research that it really helps improve NAD levels naturally in a human. And that NAD is essentially a longevity cell, which means that it helps build cellular respiration and everything. And when people get around age 25 and older, they start losing that NAD naturally, and so doing something like fasting can help bring that up and about. But there's different fasting. I mean, there's anywhere from 24 hours, 18 hours to many, many days. And I think most of the benefits kind of lose their hit after about 3 or 4 days. I think at that point your body kind of starts just consuming itself because it needs food. But between the first 24 hours, your body's getting used to it, and then 24 to 48 it kind of starts that cellular respiration. Then 48 to 72 is when your body really starts repairing itself. And so it's not always fun to do all that. But
What's
I know
the longest you've ever done it? Fasted?
72 hours.
72 hours, okay.
Three
yeah,
days.
I've done it too. I don't do the 3 days or whatever, but I've done like a 22-hour, eat dinner and then not eat until the next night or whatever for several days. And I lost like 10 pounds. And it really was easy. I mean, and it seemed to not matter what I ate. It was just the fact that my body had that rest time or whatever where I didn't eat.
It makes sense. And also, the smaller the eating window, the less, you can eat. So that helps in itself. But, it helps reduce the risk of diabetes. It also, in men, if you fast for 24 hours or more, it can increase the production of HGH secretion, which HGH is essentially helps build and maintain lean muscle mass. And that's something your body will kind of eat towards the end, like when it has nothing else to go after. So that's something that's interesting. I mean, there's many other things. It helps lower LDL cholesterol, which is something everyone always rants and raves about. And there's many other things, but I mean, also just thinking of it from a primal standpoint, we hundreds of years ago, we would hunt and get our meat and, have a feast and eat, and then, maybe days without it. And so it gives your body time to heal itself and recuperate and everything. And also just from a mental standpoint too, it's good to, push yourself in that situation, because, most people, they eat breakfast, lunch, and dinner, and they have ever since they're born. And this is something you got to kind of think like, we're in such a time of instant gratification. If you want, I can order the most delicious thing on this planet just with the touch of a button. This helps kind of just tamp that feeling down.
But
That's
with
good.
your extreme sports, you need all the calories you can get. You don't need to be fasting.
These days I'll maybe do the intermittent fastings for some days of the week. But yeah, once I get done with all my bigger events this year, I will definitely tamp down on that end. But it's great. Something that 9 out of 10 people, I would say, should try out. Just do maybe a little research beforehand. But I mean, it's something just mentally, physically, and even spiritually. It
Yes.
can give yourself that time just to reflect and pray or just
Oh,
reflect on
I've
yourself.
done that. Instead
yeah.
of taking that time in the middle of my day to eat, I'll read my Bible
Yeah.
or something and
Exactly.
just meditate for a few minutes. Yeah.
That's what I do. So it's great. I recommend it. And so that we thank you for coming in.
Thank you for having me, John.
You know, you'll be back sometime, probably very soon.
Okay.
And so just to round things up, I like to finish with our mottos. Please don't forget to always buy quality and diversify. Thank you for listening in. The information provided in this podcast is for educational and informational purposes only and does not constitute investment advice, a recommendation to buy or sell securities, or an offer or solicitation of advisory services. It does not take into account your individual financial situation, objectives, or needs. Investments involve risk, including the potential loss of principal, and past performance is no guarantee of future results. Woodard & Company Asset Management Group is a registered investment advisor with the SEC. Please consult your financial advisor or tax professional before making any investment decisions.